Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, we saw good upside on the chart of gold yesterday, and ultimately gold closed at 1855. So that was a good recovery on the chart of gold, and the reason was here you can see gold books best week since mid-January as dollar treasuries pull back. Yes, there was correction on the chart of dollar as well as bonds also play a big role. You can see bonds, US government bond was under correction. As a result, gold started flying. So the market opening will be very important, because if you look at a chart of bond, then we can see that it's standing at the 50 moving average right now, and the 50 moving average has been playing the role of dynamic support for the market for quite some time. So this support is very much valid for bond. So if it takes support and starts going up again, we will see gold coming down. On the other hand, if we observe the chart of DXY, right now DXY chart looks choppy, but if we simply put Fibonacci here, then you can see the market closed at the Fibonacci 61.8% retracement level, or 0.618. So it just closed at the support level. So DXY is also standing at support. Bond market is also standing at support. So the market opening will be very important. So after the market opening, if they start going up or if they show some recovery, then maybe we will see some selling on the chart of gold again. Before we proceed further, I would like to mention about Chart Prime, who has sponsored the today's video. Those who want to generate their own buy and sell signals, please watch the video carefully, because Chart Prime is one of the best custom indicator service in the trading world right now. With the tools available in Chart Prime, you can not only generate buy and sell signals, you can also use these tools in your analysis for additional confirmation. They also have a trading community on Discord where they post regular trading ideas. Trust me guys, I have been using Chart Prime for a couple of months and their service is really awesome. If you really want to know how these indicators work, you can just go to their website chartprime.com and just go to the tutorial section. You will see the functioning of these indicators. Okay, my dear friends, as we are traders, we believe in probability. So I won't say that these indicators are 100% accurate, but with proper risk management, you can definitely make some money. Let me show you. This is the 50-minute chart of gold. You can see the signals generated by Chart Prime. Okay, see possible reversal down. See, it means that we need to take a sell position here. Possible reversal up means we need to go for a buy position. Possible reversal down means we need to go for a sell position. If not trend reversal, at least you can expect 40-50 pips on daily basis with the help of the software. But yes, the tool also generates false signals sometimes, because 100% accuracy is not possible, as we all know. But yes, the accuracy is certainly very good. Along with the buy and sell signals, you can also see that they have an oscillator where they also provide the overbought, oversold, divergences and many other things. Just watch the tutorial, you will know all the things. You can just go with the 1 month subscription and just try out the product yourself. I'm very much sure that you will love the product. And my dear friends, if you use the link in the description below, you'll also get 30% discount. You may also scan the QR code available on the screen for faster registration. Check them out. The major levels on the chart of gold are still the same. For example, the level of 1864 to 1870. Okay, the resistance is still very much present on the chart. You can see standing as the resistance for the market. And in my previous videos already I have explained why we're considering the level here, because of previous price rejection around this area, as well as we have Fibonacci 30 8.2% retracement level. So there's a high chance that market will face some selling pressure around this area if gold starts going up. So for Monday, 1864.70 is the resistance for us. And the previous level of 1844.45 is the support. Why? Because the resistance, this was the resistance previously, and the same resistance will now be acting as the support for the market. If you look at the chart of gold here, then you can see the market, the chart has already moved up considerably. And if you are planning to take a buy position, then you can see that there is no proper support here. So your risk to reward ratio will not be much in your favor, because you'll be taking a buy position in the middle of the chart. So taking a buy position at retracement is the best trading strategy that you can follow. So after the market opening, as I said, that if DXY and bond start going up, then obviously we will see some pressure on the chart of gold, when gold will be taking support around 1844 to 45 level. We can go for a buy. And one more reason is, if we just draw the Fibonacci here also, then you can see, apart from being the previous resistance, here right now we have the Fibonacci 0.236 level here as well. So for Monday, we have 1844 to 45 as the new support for the market, or first support, and second support is around 1836 to 1837. Okay, these two are the support levels on the chart of gold, and 1864 to 1870 is the resistance on the chart of gold right now. So the market opening will be very, very important. After the market opening, be careful, observe the market first, how the market is behaving. If you are planning to take a new position, then yes, it is better to wait for the right time. So if market goes up, then wait for the market to reverse from the resistance level. If you see proper reversal, if you see market showing price rejection from above, you can go for a sell position. On the other hand, if you see market coming down, or market showing red candles after the market opening, wait for the market to take support around these two levels. If you see market taking support around the area, you can go for a buy position. One more thing I would like to show is, on the 15-minute chart, I observe a bullish flag, and you can see the market is already above the flag. The price is already above the flag, so it looks like a breakout pattern already. But keep in mind, Monday markets are not normal. Usually we do not get to see much volatility in the first half of Monday, especially during the Asian session and European session. So for a breakout, we need volume. Market needs volume. Without volume, a breakout cannot be real. Okay, so be careful. So if you're thinking that market will be going up, the trend will continue, then it requires volume, it requires buying power. If that is missing, then you won't be seeing that buying power. So let's wait for the market opening right now. Okay, let's wait and watch. To be honest, yesterday I was hoping that market would reverse from this particular level. I took a small sell position also, but when I saw the market is going up, so I exited immediately. All the best, and keep in mind, this is mindless. I can be wrong as well. I'm also a trader like you, maybe a little bit more experienced, so please follow proper risk management. As always say, do not gamble with your hard-earned money. Capital protection should be your first priority always. Bye bye, take care.